That worked. Okay, good morning, everyone. Happy Friday. It is May 15th, 2026, and this is the audio edition to the Daily Trade Strategy Brief. NFA Compliance Rule 2-29C, subparagraph 1. Past performance is not indicative of future results. Alrighty, let's get hopping here. Today is options expiration, OPEX as they call it for short. And so a whole bunch of expiring options there on the opening. This is the overnight activity. Just taking a look a little bit at the bigger picture here, the 4-hour chart, which is a 240-minute. Again, we've been in this monster up move. Yes, I am. 1 second. Am I speaking? Yes. Hopefully everybody can hear me. Marlon can. If anybody has any issues, let me know. If I have to restart, I'll restart. All right. So, anyways, we've been on this kind of this parabolic tear for quite some time, reaching up to the 75, 40 level near to the 50s. Really, you don't see my name to turn on. That's interesting. Okay. Did you restart or refresh? Try refreshing. We'll turn Manny off. All right, let me restart my platform here. Stay with me 1 sec. All right, 1 second. Let me just restart. Okay, how about now? We have audio now. We're good now on the audio. Okay, great. Sorry about that. It must have been on my end. Let me get the charts back. Okay. Yeah, all good now. Okay. Let me get the charts back up 1 moment for the room. Guess that was on my end this morning. PTG, let's see. Open range. Technical difficulties on a Friday morning. All right. All right, we got the opening range should be coming up. And let me get the main room here. One sec. Think it's easy, huh? All right, John hears me down south. All right, y'all should have now audio is good. And how about the Viz? Viz good? All right, super. All right, we'll just get restarted again. Thanks, everybody. And again, thanks for being here on a Friday. This is Capital Preservation Day. It's been a crazy week. Market's been just chugging along to the upside. Again, it is options expiration, so apparently we got a little bit of a pullback here over during the overnight period. Again, this is a 240-minute chart. All right, just broadly looking at the upper trend. All right, and it's just beautiful moves. Again, just kind of beautiful moves up, pull back, beautiful moves up, pull back. Right, and now we get another pullback here. So right now, similar. to the prior pullbacks in terms of magnitude and time. All right, so high to low, right? Measure that, kind of the what we call symmetry. So that we got some symmetrical swings here, right? So what are we saying there? Well, this right now, yeah, it looks fairly robust on the pullback, but in the scheme of things, bigger picture, right? The scheme of things, it's kind of a garden variety, pullback. Has any structure really been broken? No. How do I determine that? I'm going to look at prior pivot areas. Okay. So in terms of structural areas, I'm going to be kind of looking at these structures here, these pivot lows as kind of more of a core structure break. And so pullbacks, let me just categorize pullbacks. Pullbacks within an uptrend is typical and normal. It does not necessarily mean that structure is broken. It just means that the market has extended, quite a bit. We talked about that flag pattern yesterday. So, for those that were in the room here yesterday, we got a kind of few different kind of flag patterns, right? Just kind of quickly go over those. You got one where, you got to move up, and then there's kind of the drooping flag, right? And that's kind of a typical flag, right? And so that would be like denoted here, like a move up, right? And then kind of this pullback here. Make sense? Right? Another, get another one here, kind of pull back there. All right, so that's the kind of a typical flag we look for. It kind of comes into like a triangle pattern. And then you have another flag where it's a bit stronger, right? Kind of think about this as, just, a good solid wind flow. And then you got one here that looks like this one, right? That's really pushing. And that's kind of what we had over here yesterday, right? And that's typically kind of a blow off pattern, right? Where, I mean, the buyers are just ramping on it, and then they just kind of flush out, they flush out. In other words, they buy, right? And then what's left in its wake is a potential pullback. Notice what I'm saying, it's left in its wake. So that move typically denotes a completion of a move, and then we get a pullback. Okay, so that's kind of what we have here. During the overnight, you can see here, this is a 5 minute, right? And again, you can see all the various time periods for trend direction. And again, where did the shift occur? The shift occurred last night where broke some lows. Okay, we got, first pullback, kind of a premium. Got another premium. Got a third premium here. Right? So that was a real good overnight for you, for the folks that trade the overnight session. All right. Now, today is cycle day 1, and it is certainly a normal cycle day 1. Again, the expectation of a kind of a completion of the cycle day 3. Again, it hit those penetration levels we were talking about yesterday. And then what's the next expectation, right? A rotation down off of the cycle day 3 high. So it happened essentially here during the overnight, and the average decline, I posted it in the room, 74.46 and change. So the average decline for a cycle day 1 is complete at this stage. All right. Now, when I say complete, doesn't mean it's the low of the day. Just means that the average decline, projected average decline, has been fulfilled. Okay. So I want to be careful how I say that, because somebody may interpret it as, oh, the low's in for the day. It may be, but we certainly don't know that. It's not in until 4. But we can infer that, well, there is a possibility of a tradable low. And I say tradable low because we'd be looking to trade off of this for some sort of a bounce, right? Direction is still kind of leaning down, but we're entering into into the OPEX. Markets, had to move. It could certainly bounce. All right. And it could bounce, briskly too, right? Anything can happen. So we'll see. All see together. What would kind of level would need to kind of clear, right? Again, this is the prior low. So remember, mark that as a reference. You got some D-level money box levels here. So let's just quickly discuss that. We got about a minute and a half. Let me put the D-level money box. So in the D-level money box area, the market has overshot them. All right. So what happens when the market overshoots? What happens when the market overshoots them? What are we looking for in order to trade them? Right. We can't trade them down into them. What are we doing? We got to trade them on reclaims. All right. So how you want to trade that is your choice. Whether you buy one on the as it's going up into those, as you know, again, you could certainly do that. Again, it's your plan. Or you could wait for a move up there and looking for some sort of a shift. Again, you got to figure that out for yourself. All right. Okay. John says he already took the reclaim. All right. So you got to just kind of figure that out for yourself. I don't know which one is the best. You got to do some research on it. Right. But all I can say is we want to look for that reclaim to trade that. All right. All right. Market is open here. Let's see. What Mr. Market has in store for us today. Hopefully something good. All right. All right. All right. So everybody's good with that? All right. Again, also, one of the things we talk about, and I'll just quickly talk about it here. All right. Now, again, using this as a guideline, up to you. But here's the rub. If you take along here, all right, so this is MB2 actually, right? If you take along an MP2, so if this is your entry, right, your first target is MB1, and this is what coming from below, right? First target, second target, D level, okay? Tracking? If you're going to trade this, so if so if the market came up here and you took the entry there and you added here, well, actually, again, a little bit more. It all depends how you want to play there, because if you bought one here, you'd probably wanting to sell one here, or, and again, if you have multiple contracts, right? Um, I don't think anybody would be adding on, higher. Maybe. Again, all depends what your plan is. But the idea is if you took the long here, all right, a scale point would be the next level. And then, of course, you want to adjust your stop accordingly. And then the next level would be the next level, D level in this case, right? And then, of course, back up there, right? So just kind of go back in reverse. Right? So if you're buying them on the way down, on the way down, on the way down, when you're buying them on the way up, again, you can just kind of have to work it, into whatever type of plan. All right. But again, all these levels really valid and uh, good for a trade. Remember, we're traders, not, portfolio managers. All right. Everybody's good. All right. If you took the back test of the A10, again, in this case, it was not the very first uh, touch that happened overnight, early this morning, actually. This is the first touch in RTH. So that is still valid if you want to take a trade on A10 in RTH. Okay. Again, be sure to review these videos, everyone. These morning videos. I'm giving you gems. I'm giving you really key pointers on things. So just be sure to watch them. I mean, I'm only saving 5 of them, archiving only 5 rotationally. And I do believe you have the ability to download them. So if you want to download them and archive them on your computer for future reference, be sure to do that as well. All right. Just a quick programming note today. It is Friday. I am taking the afternoon off. So I will be here till noontime and then trying to get a long extended weekend. So let's see what we can get accomplished here. All right, and be sure to, if you have any input you want to provide, please do. All right. Do, do, do. Yeah, yeah. 1 second. All right, so the lean obviously is down. We'll respect that lean. All right, the D-level money box reclaim play has been fulfilled. Okay, remember you got to be pretty quick on those. In this case like today, we get momentum to the downside. If you're looking to take those reclaims, it's again just for kind of a quick trade. All right. So I don't have anything on an automated basis here yet. So we will be patient. We will be patient, or otherwise we'll be the patient. We don't want that. It is options expiration today, so we'll have some, should have some good wiggle waggle. All right, no reason to catch falling knives, right? Trying to pick a low. It's not our gig here. All right, for those of you out there that like to try to pick lows and highs, not what we do. You can certainly try to do that, but if you wish, but caution is warranted. Let's see if we can get some sort of decent trade out of it. We've already gone, market's already moved overnight 98 and a half handles. 98. How do I know that? All right, because I have the automatic today's range, 98 and a half right now. Okay, so it's gone quite a bit. Give it a chance to settle in. Um, yeah, it's tight right now. Well, yeah, the lean is so the lean is down coming in. The lean still remains down for the time being. It does. So, yeah. I'll wait a little bit more to establish a core sandbox. Give it some time to work through here. Let's see. I think the average daily range, it's like 80 something, right? Yeah, the average daily range is 78 and a half. So we're 20 handles, a little less than 20 handles over that. Oh no, no, we are 20 handles over that. So yeah, so we're exceeding the 10-day average true range. So we got expansion of the recent ranges. It's kind of what happens. I've seen these parabolic moves. I've been mentioning this parabolic move for, you know, most of the week as it was developing. And again, parabolic moves like this are inherently unstable. And so when they end like I said earlier, in their wake, there are no longer buyers. And if we were following the spot gamma, the gamma guys uh, metrics, there were a lot of call buying that has been driving that move up. And there was some also, I think, I think Libby posted something to the effect that, I don't know, one of the funds or something had on rebalancing. I forget exactly what that called for, but the read through was that, yeah, the leveraged ETF, QQQ ETF. Thank you, Libby. Yeah. So the leveraged ETFs, again, they're like jet fuel on crack. So they were jamming that up. It was all kind of part of that momentum, kind of have to satisfy the call option buyers, right? But when that ends, there's some, type of retracement. And with kind of these, these ETFs, these leverage, remember what it is, it's all mechanical when it comes to that. That these ETFs are operating in a very mechanical, technical type way. They're not considering what the value of anything is. They got an order to buy, they got to buy them. There's no like decision, well, I don't really want to buy up here. They just have to buy them because that's what they need to do to satisfy, that order, to complete, whatever their current project is. So, jam it up to 7,500, call wall. As a matter of fact, that was a call wall yesterday, 75.23 on the ES. And I think it's still the same here today. So that's that again, those big call walls, right? And generally when those call walls, let me just bring that back in this chart again. We come into these call walls up here. Look at that call wall up there. Okay, 7,500 SPX. So kind of keep that in mind when you're thinking about the option stuff, where prices accelerate as they did, up into the call wall. They overshot it a little bit, but right in there, generally the call wall acts as resistance. Doesn't mean it's going to stop on a dime there. Remember, the market has to absorb. When we talk about kind of that support resistance concept, the market has to absorb it. Okay, so kind of think about support and resistance, if you want to use those terms, as shock absorbers. That's how I view support and resistance. I'm areas where sellers are going to start responding or buyers are going to start responding as shock absorbers, right? To slow that momentum down. But when that momentum, finally stops, okay, and all in this case, the buyers got filled up near those call wall areas. Well, if somebody wants to start selling them, there aren't any buyers remaining. And guess what happens? You're seeing exactly what happens. Market starts dropping. And how come there aren't any buyers? When I say buyers, aggressive buyers to hold it. There are always buyers and sellers, but are the buyers supporting any of this stuff right now? Nope. Why? They bought what they had to buy yesterday or up into yesterday. No more buyers to be able to hold it. A lot of people don't understand that concept out there. And so on a day like today, they're saying, "Wow, they were buying them yesterday. They ought to be buying them today." Nope, they don't have to be buying them today to the degree that they were buying them yesterday. And then a lot of people get, jammed in their face. You got to understand how this, these things work and rotate. Hopefully, we try to give you some of that insight over time. All right, let's see where the market will try to find some. So down over here we have 74.26, 25 area. You can see it on our charts. This is a cycle day one violation area level. CD1 VIO violation. All right, what does that mean? That means that we get an extension below the prior low, right? And this is usually going to be usually get a response off of those areas, right? And it's also, look at this right near, this is a 5-day point of control at 20s. Look at that. So again, make sure you look where those reference levels are, right? Because if you don't know them, I can assure you the big boys know what those levels are. And again, that could provide, what's the benefit of knowing those, right? It's not being predictive, but a high volume area, the highest volume node, just that alone, what would you consider it that could potentially happen there? Anybody? The highest volume node, the most trafficked price. People are going to come in, support, resistance, whatever you want to call it. There's going to be a buy response. I'm 99% confident there's going to be a buy response. So is that a potential tradable event? Yeah, Ram says a response, right? Is that a tradable event? Very much so, right? All right. I still don't have anything on an automated basis yet. So we'll mark that off the 20s, 25 zone as kind of a key area. All right, let's just kind of go 2025 is kind of this key area here. Trying to frame things out. That's why I said, Ram, I didn't want to frame things out too early for the sandbox. Now we can get a little bit more along those lines. Yeah, another thing about when you're trying to frame out, the sandbox and stuff, you don't have, remember, take your time with that. It's not like, remember, we're framing out what we think the sandbox will probably be. Market doesn't know it. They don't give a shit what we're doing, all right? So we're just kind of marking things off as references, all right? So you could do kind of this high, this high to this high. So we can mark off kind of this zone right now. All this means is this is the current boundaries. Pivots high, pivot lows. That's all it means, right? Prices would need to move away from those areas as we've marked them for either, reversal back higher um, or an extension further lower, right? And again, these are movable zones, so they're not a hard line in the sand, so to speak. They're just references, kind of helping you kind of frame things out. They they don't have to stay there, but it can give you some idea that if the market, this is where the high areas at this moment in time, that's as far as the buyers were willing to pay up. That's all what we're trying to reference. And if they pay up above that and then hold above it, then that could indicate that something is beginning to change. Can they be used as your, kind of resistance zone or looking for a sell? or short play there? Yes. That's why we mark them off. Don't I have these on? I guess I do have it on. All right, let's change that to 1. All right, so we got a little move above that. That's what I said. So it's not necessarily going to be hard resistance, but just more of a reference. And then now we want to see if prices can stay now above that area or in any pullback. Again, another thing you want to think about, right? Here's your VWAP zone. Guys, all I'm doing is trying to instill these things in your head. Remember, the thinking, the thought process, kind of thinking 2 steps ahead, looking for some changes. Did I do 3 and 3 and 3? Oh, yeah, yeah. It's 1, 1 and 1. Yeah, I'm sorry about that. I got 3 on my mind. Wait a second. No, not hold on a second. Yeah. No, my bad. I had the terminology incorrect. No, this is the high volume node over here on the left, right? The 7420. Okay. Point of control. Yeah, yeah, yeah. That's what I meant. I'm sorry about that. But again, that was a key reference, right? And we got the violation at 26. So that's why I went 20, 25. Okay, I'm just trying to give you the reasons why I'm outlining those levels, those zones. Okay, so you can kind of, stop this shaking. Um, so you can get that yourself when you're trying to look for something. All right, like why did we chose? Why did David, select that area? Well, over here, what can we identify? Always ask, what can I identify? All right, what can I identify? So we got the POC and we got our violation. So this is our 2025 zone, okay? That's step number 1, right? POC and the violation, all right, for CD1. Everybody got that, right? Okay, so once we have that identified, again, as we're coming down into that area, we're looking at the larger picture. What can we identify? We're able to identify that zone. We don't know whether or not that zone's going to hold. We're identifying it first. Step 1. Step 2, looking for a shift. We get a move up and we get a shift. Okay? And as Ram asks here, the A4 discount is the first pullback. Yes, absolutely. First pullback. Okay? Map this out for yourself today on your own charts. I'm not going to leave it up there. So map it out for yourself on the charts, right? That's the play. All right. Yeah, let's see if the buyers re-enter here on this back test of the pivot. I point this out, and again, reference this because you want to be asking, what am I looking for next? What am I looking for next? I can identify, that's what we try to do. We try to identify areas, level, zones in advance. And then once it gets there, what am I looking for next? If it holds, if it doesn't hold. Because if you're not thinking that way, if you're not, looking for that, you're not going to see it as it's unfolding in real time. All right, so let's see if buyers step back in here and push it up. Otherwise, we could get a rotation down to retest those low areas. So critical spot here for the bulls. All right, we do have an A10. Let's see if this plays out. All right, so an A10 long. All right, so this would be the critical hold. Again, long of A10 there. There we go. All right, first scale. All right, so continuing to scale on that. And again, we're risk-free on the balance. All right, stop trail elected. So that was a decent trade. We'll take it. Bum, 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 bum. All right, things are flattening out. Now we're establishing some sort of a two-way trade here, right? So a little bit of balancing two-way trade again in this vicinity. Okay. All right, you can see things have just kind of really calmed down. All right, so that 31-ish, 32-ish area, again, that the A10 here holding. All right, we did get stopped on that on the pullback there, but that's fine. Again, good trade nonetheless. Managed it well on the stop trail. All right, not much more to say at the moment. All right, so things are quieted down quite a bit. So remember, if you caught any of that, it is Capital Preservation Friday. I am taking the afternoon off. Gonna go have lunch with my wife. Okay. Okay. Save. Save. All right, so this area, this 810 held, kind of pushed up to VWAP. So again, if we get next some sort of an opportunity for a pullback here, discount, again, we'll be looking for that. All right. Careful up at VWAP there. Again, that's going to typically be a potentially a stopping point, at least initially. All right, so next step stage here, you want to see that VWAP. If you're on the bullish, stay on the bullish camp, or if you're managing along, you want to see that area get lifted through, all right, and can continue to hold any pullbacks to be relatively shallow, all right, to kind of maintain that long position, long bias position. All right, structure holding well, playing out well, no complaints. No complaints from the peanut gallery. Oh yeah, did I put I? Oh yeah, I did add that. Okay. All right, well, they looks like they cleaned out whatever sellers were out there. And we do have the D-level money box reclaiming. So, um, question to everyone, is the D-level money box still valid levels for a second bite at the apple on a reclaim? Yes or no? What would you think? Or is it only just the first? John says yes. Second bite at the apple for John? John South? Yeah, I'd say yes. I would say yes. And again, kind of put it in context, right? So, we have the A10 here holding, right? You're pretty much right at that 45 level. So 45s? Yeah, 45s. So if we take out 45s, right, the money box level, okay, if we took out that money box level, right, so that would be MB2, right, in this case. And then you have MB1, right, up here near the VWAP. So again, a reclaim, an RC, right, a reclaim of that level, is it valid to take again? It's a static level, so it is valid. Again, if you so choose. Just wanted to say that, again, questions like, well, it already happened in the first time round, right? Is it not valid anymore? No, it is very valid. So just something that you may want to kind of consider, keep under your hat, or go back and look for instances where this condition happened before, and then see what happened. You got to go back and research it. And you've heard me say this multiple times ad nauseum, but that's just what you really need to do. All right, so we're long shifted. All right, so buy the F and dip if and when it occurs. What would be the goal at this point? Goal to reclaim what? Prior low. Thank you, Bueller. Reclaim prior low. Get back up into prior range. All right, let's see if we can pull back into, say, VWAP-ish area here. We're coming now into discount territory, so we'll see if we can get some sort of a play out of this. Again, fell short of the prior low, and again, that is the reference there that the bulls would need to reclaim. Usually on a push first into that low, usually not going to get a reclaim that quickly. Just how the market functions. Everybody knows that prior low. Now this needs to build some more reason here. Again, we're by VWAP, and generally that's where all the big institutions like to, congregate. We get a high volume node below, kind of a stall out here up near these highs. So maybe looking for a little bit of a deeper pullback here, kind of less of a strong momentum play. Yep. All right, so no long on that. Again, there was a discount forming, but not enough to trigger. All right, so there's our discount that was forming, right? But again, after a fairly robust move like this, kind of great up, again, our fair value zone gets stretched, doesn't it? All right, look at the spread on that. Gets pretty well stretched. And then, as it starts rolling over like this, one of our prior members years back called this the what did he call it, Steve? It was like the bird's beak or something like that. All right, the bird's beak. And you got to be careful with the bird's beak because that will peck you. And but you can also see here, right, the bid ask, okay, um, volume ratio, all right, was clearly negative there. So again, after, like I said, after kind of a move up, particularly when the fair value zone spreads out like that, all right, don't be too aggressive. John B says, "Oh, I can see that." Yeah, it's kind of like a bird's beak, It's funny because he would go like this, and he would put like feathers on it, and you kind of draw this like a bird's beak. So he says, "Yeah, I don't take those trades because I don't want to get pecked." uh, yeah, potential BLT here, absolutely, right? So you got the low there. Oops, you got the low there for a BLT. Yeah. So if another thing, using the fair value zone, right, and how to kind of incorporate, the fair value zone into kind of the observation, right, the OODA loop is, when it pinches, you can use whatever descriptive you want, right? But when it pinches or when they, collapse, right, you see like right in this area here where they're real tight all around. So that's compression, right? That's compression. So compression is obviously, the energy has dissipated to that point, right? But it's also when the market is compressed like that, it's in a period of re-energizing energy. Kind of think about that, right? So it's in a period of re-energizing, kind of balancing a little bit, but it's re-energizing both sides, right? One of the sides is going to win, but it's re-energizing. And so when you start seeing expansion, then after a period of compression, that can be the actionable point in time. So that would be in this case a bull stacker, right? So that could be an actionable point in time. So that's one phase. So this is a good example because the market then expands. What does it do to the EMAs here, right? The fair value zone. It expands them out, right? So that's the expansionary stage. So you got compression, expansion. All right, and that's all good, right? Because where you'd want to be taking the trade is somewhere in here when it's expanding after compression, period of compression. What you want to be careful for, and this is the idea of, I think it was Chris that said this a number of years back about the bird beak. Um, After the market has expanded to a degree, right, you typically will get a retracement pullback. This expansion here has, just for what it has done, it's expended, not only expanded, but it has expended quite a bit of energy. So when the price comes back down, this is where Chris said years ago, that reminds me of a bird beak, and he didn't want to trade that, which kind of makes sense. But really, the idea of this is that the energy that was built up lower, that's expanded higher, has been expended. And so when you get a discount, like in this area right here, okay, look what's happening, right? We get a discount in what? Weakening conditions. These are weakening conditions, right? The direction of price, that discount is forming underneath those moving averages that are moving lower. So that's a discount in weakening conditions. We want a discount, which is a pullback, but we want it in strengthening conditions. That's the difference. And again, if you don't recall that, go back on the in the members area. It's all explained out in further detail. I'm just kind of giving cliff notes about this right now. Right? So what do we need to do at this stage, right? So we need to look for, in this case, now the market has not only expanded and expended, okay, but now it needs to re-energize. It's like Star Trek, right? Energize. Um, but here it needs to re-energize for whatever next move it's going to make. Some concepts to think about. And of course, price is back at VWAP, so we know generally what the VWAP zone, what the expectation there is some balanced two-sided trade, which makes sense. So now look at the compression that's happening yet again. So we've gone from that compression stage to an expansionary stage. Now we're back to a compression stage. All right. So these are all kind of formations in price action that you really should be aware of. What conditions are currently in play. And that could lead you to the next decision. Is that fairly clear for everybody? All right. And again, the goal for the bulls in general would be to get a reclaim above prior low, get back into yesterday's range, and then build reason to keep moving higher. Looking at the spot gamma levels here, right? Again, I'm not an expert at this, so don't, again, take it with a grain of salt here from what I'm going to say. But with the spot gamma stuff, this is it's a 1 minute chart. So over here, this is the price chart right now in this area, right? What I'm seeing here in terms of kind of key levels here, this block of strikes, right? 74.50, and then this block of strikes, 7,400. Okay, so just using some options related metrics, this also kind of forms that boundary. Again, based upon this, doesn't mean it's gonna. None of this stuff means it's gonna hold, definitively, right? But what it does show us is there's some commitment, at various levels. So when price came down, into that low area, right, the 7,400, which is around the 74.20s, right? Um, you know, you could ask, and again, if you're looking for a reason, right, asking the question why. I don't like to ask the question why rather than, more, I would ask what or where rather than why. Okay. But if you're going to say, if you were looking for a reason of as to why price stopped around the 74.20s, we already kind of considered the high volume node earlier on the 5-day point of control. But in addition, if you're monitoring the uh, gamma exposure on strikes, look at that, 7,400, which equates to 74.20 right there. Could that be a reason? Well, or let me rephrase that. Is that the reason? Well, I don't know if it is the reason, but it certainly could be an explanation or partial of a reason. Why is there big commitment at that level, right? And on the flip side, you go up to 74.50, a little bit above the where price is now, right? There's another big level there, right? So as price was coming down this morning, again, for those that have the spot gamma stuff, I call them the gamma guys. If you have that, you'll have information already on there live and saying, well, there's a big level there at 7,400 SPX, 74.20 ES. I'm pretty highly confident that's gonna hold, or something's gonna happen near to that level. You see how I'm approaching it? So again, just more information and again, to me, I refer to this as fundamental information. That is a need to know. Not fundamental from balance sheets, but fundamental in terms of where is the commitment. So there's the question where. So where is the commitment, all right, of traders? You have one way up here, right? Way out of play at the moment, right? But as price came down during the overnight, you're kind of looking and it's like, well, what's an area, to think about based upon options. And of course, one could say that, the options really drives, the market to a degree. So certainly something that, can be useful in trying to map out, trying to make some sense of where price, is likely to go. So I have this on another screen. Again, I'm not showing it all the time. If you're interested in any of the spot gamma stuff, they do offer trials. But again, and a lot of what I talk about and the levels and you know everything I take all of this stuff, in an amalgamated form, and I pass it along to everybody. Do you need to have that? Go take a trial. I get nothing from having anybody take a trial or subscribe to those things. I get nothing, right? All I know is I follow the options market daily, whether I'm trading options on that particular day or not. Again, I do trade the options based upon the cycle. But again, I'm monitoring what others are doing. And that can help us, at least it helps me, frame out, you know, I mean, if again, just on top of that, let's just mention this for a moment. On top of that, what else was there near that gamma level? Well, we had a cycle day one violation level at 26s. There you go. So now I'm starting to, which is a totally different approach. So now I'm starting to layer in, okay, we have a gamma level there, strike gamma, right? We got a gamma level there. We have cycle day one violation, totally different method. So that's beginning to overlap. And then thirdly, we have a point of control, that yellow point of control there on the left chart. Again, that's totally different. So you throw those together in the pot and it comes up, hey, that could be an important area for the market. Well, we know what it is. It is proved itself that way. But it doesn't help us after the fact. It only helps us right now in what I'm trying to describe to you and show you. It doesn't help us put a trade on anymore at that level, but it does help give us some context of the why of what was there that created a buy response. And those levels are known in advance if you have those, type of subscriptions, be it the 3-day cycle subscription or the Gamma Guys subscription. This level here, this violation level is on the chart last night. So in preparation for today, same thing, with our D levels and so forth, we have those uh, displaying for the next day, the night before. So all this stuff you can, prep. How many of you do actually prepare the evening before? Kind of take a look and maybe try to map out, some potentials. How many of you are really actively doing that? You don't have to tell me. Just, all right. Okay, so John says no, but that's okay. All right. I mean, life gets in the way naturally, right? You got things to do. Long day, tired, want to go to sleep, get some rest, get ready for the next day. But you should spend some time, looking at, I mean, it could be as simple, as, what are the prior highs and lows? Um, you know, take a look at this screen. Okay, so this would be, you know, this is our D-level money box screen, just isolating the D-level money box. And then these blue lines here, right? These blue lines here are highs and lows, right, of the ranges, right? So they're just highs and lows of the prior day's range. And then our historical D-level money box. So this could be something very simple. There's, you know, nothing else cluttering up the chart. And then you'd want to be, just like coming into this day here today, right? So here's where the market closed. And it's a simple preparation could be, again, here's how I like to prep. If, right, then else. Simple, kind of if this, then that. So ask yourself, you know, if the market goes lower, if the market goes higher, right? What would be, so the if, then, and then, what would be a potential target, right? Well, you kind of then look back and you're looking at, well, what happened yesterday? Well, I see all this, you know, grind up, right? There's an expansion candle there, right? So what would happen if price comes back down to this area here where this expansion candle happened, right? What would you be kind of looking for, right? A hold or a fold, all right? Again, this is just something you look back and say, okay, if the market goes down, what areas can I identify? And then what you do is you create a scenario. If it does this and it holds, or if it does this and it folds, then kind of continue with that scenario. Well, if it holds, then you would look for, a bounce back up, right? Validating that area continuously as some buy response. But what happens if it breaks, right? So when I prepped last night, I only brought my targets down to the prior low area. I didn't expand them lower. I could have, but I'm just looking for, like, all right, if we rotate back down, we'll see if we can test the prior low. And that would be kind of the initial targets that I outlined, right? I'm not saying, well, okay, the market's going to break that low. And I could say, well, if it breaks that low, so the next kind of phase becomes, right, if it breaks down, where would be a target? Okay, prior low. Well, what happens if it breaks that low? Where's the potential? Okay, so boom, boom, you know, right? Down to, again, now you start looking at, that's where you got to look at some of the bigger levels on the other charts. But basically, all I'm trying to get across is you really should try to prep yourself. It's fine if you just read the daily trade strategy, which is a good prep. But again, what we want to try to do is help you start kind of doing some of this stuff on your own, right? To get some sense. And again, that's if you're that, that's if you're that inquisitive to do that. Obviously, you could come in every morning and do zero preparation, and you just come in and say, "Hey, I'm going to take that first discount, take that first premium, and be a happy clam doing so, if that's what you want to do." All right? I take no issue with that whatsoever. You know, keep it as simple and as straightforward as you need it to be for yourself. But if you're of the inquisitive type, and you want to try to, it's kind of like deciphering, cuneiform tablets. What is the market actually saying? Trying to decipher the hieroglyphics, right? What is the market trying, trying to say? So these are the things I'm curious that way, you know. And you could find that it can form a trade for you, like against that 74.20 this morning. You say, you know what? Hey, it's down there D level, or not D level, but rather the violation level. It popped below that, and then a reclaim back up could be open the door for a trade. So all these things kind of, if you're inquisitive, and that's where you can really uncover some real nice trades that are, beyond the standard PTG setups, which are fine. John said he was stargazing, saw 14 satellites with his naked eyes. Wow. Even after nursing a cold beer. All right. Oh, okay. So John asked, at what point in a time in the evening do the D-level money box levels become relevant? Okay. Um, so it's going to be based upon the chart time. Okay. So typically I look at it on a 60-minute chart. So these D-level money boxes will paint um, after 7 o'clock p.m., 1 hour. If you are within that 1 hour and you change it to a 30-minute and you're past 30 minutes, it will paint the same levels. If you want to drill it down to a 5-minute chart or 10-minute chart to see what those levels are, switch the chart to that type of time period. Okay. If you don't, and you have to wait till you just because for that first hour they're kind of little, they're compressed, right, until the hour comes in, and then they expand out, and then they stay where they need to be for the remainder of the day. All right. So whatever the time period that you're looking at. So if you're on a tick chart, you're gonna have to, kind of what I would do on the tick chart then, John, is I would turn it off and turn it back on. All right. So just go into the settings, right? Disable it, hide it, and then turn it back on. Okay. So, and just keep in mind on the tick chart, what it's going to do is it's going to scrunch it up. So you have to readjust it. All right, I'm not sure if anything much else is going to happen here. We're coming down to our time period here, 11 o'clock. We're going to be cutting off the stream. Anybody have any quick questions that you want to address? All right, if not, then I'm going to cut the stream off here for the week. And we will be back on Monday. In Full Metal Jacket. Have yourself a great weekend, and we'll see you on Monday.